So in terms of trust positioning over the last 6 months, from an investment strategy perspective, nothing has changed. So the HG Capital Trust targets 8 specific clusters across the software and technology-enabled business services sector. That's what we have done for many years, and we continue to do the same. I think potentially the one thing that you would note is the private market, deal market, has been impacted by the change in the macro. So the activity level is lower, but the strategy is absolutely unchanged. And in terms of the portfolio, again, performance has been remarkably resilient. So the companies and our top 20 companies are still generating 25 to 30% revenue and EBITDA growth over the last year. So there's sort of very, very resilient performance at the company level. But obviously we're noting a change in the deal dynamic somewhat. So in terms of trust performance, over the course of the year, our net asset value has risen by just over 5%. So from a net asset value perspective, it's been a sort of reasonably good year, I would say. And underlying performance of the portfolio company has been remarkably resilient. So we have 48 investments, and 45 of them are valued above the entry point for us. So it's a very sort of positively skewed dynamic in terms of portfolio company performance, and that is all extremely positive. The share price of the company has come back over the last year, so it's fallen by around 15%. And that, again, given my previous comment around trading performance, the share price reaction is a reflection of the multiples that we see ascribed to the companies that we invest in, our comparable peer set, falling back, and that's what's netted off against our business performance to drive the share price to a lower level. So in terms of key portfolio changes, it has been a year of activity despite the sort of challenging macro environment. So we've returned just over £400 million of proceeds to investors, and we've invested actually slightly more, 527 million of new investment activity. So I would say across the portfolio, we've added 7 different new investments, and we've sold a number, many of them partial exits where we've recycled our cash, but we've completely sold 3 businesses, returning, as I said, that 404 million. And those exits were achieved an average multiple of 3.9 times the cost of investment. So they've been very successful exits in the ones that we have done. So that's been our level of activity. So the continual cycle of buying and selling continues. It's just been at a slightly different cadence. And I think what's particularly pleasing is we've been able to drive this exit activity through the portfolio over the course of the year to attractive levels of return. And actually, we've sold all these businesses above where we've last valued them. So there's been no challenge to the valuation element of how we hold our assets. So in terms of investment activity, there's 3 I would draw to your attention. So 2 new investments and 1 exit. So the 2 new investments, Pyram and TrustKey, they are both in the capital market software space, but in different areas. So TrustKey is more around software, process software for trust administration, whereas Pyram is more around compliance software. And again, these are both areas that we've had experience in the past and had successful investments in. So these are both, if you like, parts of a theme, an established theme. Both are going into the Mercury Fund, which is the smaller of the 3 vehicles that we have across the structure. And both were acquired recently in the second half of last year. On the one on the way out, which I'd like to highlight, is Transporian. So that's a recent exit that was announced in December. And I think what's really interesting about that as an exit is it was a very successful exit. So we returned 2.5 to 3 times our capital on the deal. So an attractive outcome. Also, it was sold 100% to a strategic buyer. So it's a cash transaction. So when the business is finally completed, the deal completes, we get all the cash on completion. There's no rollover. It's a pure cash out. And actually, the valuation that we achieved in Transporian, despite what was going on at the end of last year, is actually above where we held it in the books. So it's a positive uplift to the previous carrying value, which I think is very, very useful, and it's a great validation of the way that our process works and the way that we value the assets that we have. So that was a real highlight for last year. So in terms of key feature themes, the one of the things that we're very focused on is actually consistency of what we do. So in terms of the investment strategy and the execution of it, it will be the same. So we are operating in a particular set of sectors with a particular focus on certain subsectors within it. And we're very conscious of just building our experience in the areas that we care about. So trying to go over and over and over the same area again and again and again to just improve the outcomes that we get. So over the year, or the ahead and the sort of foreseeable future, nothing's going to change on that. And I think what's interesting on the business side or the investment side, the situation that we're in, the sort of dynamic of the world economy, etc., actually probably creates more opportunities for us, because the dislocation will allow more deals to be unlocked and at lower levels of price than they would have been 18 months ago. So actually, it's quite an upbeat message. And I think what also is very key is one of the biggest problems that businesses like ours can have is that you get consumed by sorting your problems out. The portfolio companies that you have suck up all your resources, and it makes it difficult to take advantage of new opportunities. We don't have that problem. So we have a very healthy portfolio that's growing strongly. And so actually the focus of the business can be on finding the new opportunities, which should be more attractive entry points than they were certainly in the last year.